Hey, Scott.
Hey,
Jamie might be
Jamie.
offended.
Jamie will be acting as Steve today. Hello, everybody. I'm Steve Jamie.
Oh, no problem, no problem. Man, he does this every day, and he's got somebody different every time in here. I mean,
My
I'd be
bad. It's
stumbling over a
Jamie
few names
Hodge as
myself too.
the co-pilot today.
No worries at all, everybody. Just trying to inject a little of my dry humor into the day. So, speaking of the day, wow, Andy, what a day!
Yeah, yeah. Hello, traders, and welcome to my desktop. And yeah, it's been an interesting, oh boy, last week I would say, and we have some cool stuff to bring you today. Thank you all for popping in here and taking your time out of your day to watch this presentation. And I don't think you'll be disappointed. Like I said, we're gonna hit on some cool topics. And before we do, let's dive right into the legal disclaimer and make all the lawyers out there happy. Guys, just want you to know that this is for educational purposes only, okay? We are content providers. Nothing that you see or hear here today should be construed as investment advice. If that's what you're seeking, go find a stockbroker or someone who's registered like an RIA, and that should make them happy there. So let's kind of move on. Just want to remind everybody, the ones that's only been here a few times or the new people in here that are kicking the tire and thinking about getting this incredible software, we just don't throw you the software and say, good luck and have at it. That's not what we do here. We pride ourselves on exceptional support and education, and I could even add training up there. It's nonstop here at Trade Ideas. We have 4 webinars throughout the week. And but we also have a trading room. The moderator in there is Barry Einerson, and he does an incredible job, guys. He's a really good trader. He calls out his trades in live in real time, and not only that, you get to see the software in action. You get to see the alerts that many of us have custom built, and it's just a great place to go to kick the tires as well as these webinars. So, and not only that, it's continued training. He's in there 7 hours a day, and it's just boy, a great hangout. We have over 500 traders in there, and it's not only him. There's some incredible traders in there. So, and then throughout the week, guys, we have it's the 5 main people that are doing webinars. 4 webinars a week are Dan Merkin, the CEO, and Brad Williams. He's kind of our tech guy that it's also a trader and does a very well job of you know showing the product, and both of those guys do. And then we got the threesome here of myself, Steve Gomez, and Jamie Hodge. So, boy, there's just really great content and to provide support and education throughout the week in these webinars. And I think we're discussed today in our marketing meeting that we may be moving Steve's webinar because right now it's on Wednesday night. And maybe you guys could chime in to see what you would think about that. We're maybe moving that to the Tuesday afternoon slot. Probably would be around 5:30 Eastern time. And that way we'd kind of split up the Dan Merkin and Brad Williams show with the Gomez and myself show and move that to the Tuesday slot. But anyway, I did want to throw that out, guys. And not only that, you think we might stop here, but we don't. Guys, if you're in here and kicking the tires, if you do subscribe, and Scott's going to give you an incredible deal after this webinar, that comes with a 101 hour of power training, and that's either with myself, Jamie, or Steve Gomez. And what we do is we will call you, we will connect with you either with GoToAssist or Skype. I like to use GoToAssist, and what I do is, we'll come in there and look at your desktop and work with you on creating alerts, creating a laptop. We can talk about trading and how to use the alerts, and it's just a really good hour to be spent really getting to know the product and how to use it. And that's a $99 value in itself, and you get that free when you subscribe. So if you're in here and you're thinking about testing out the product, he's going to give you a good deal. You can sign up for a 1 month with no contract and come check it out and just see what we have to offer and see our incredible support. and education, and most of all, our product. All right, with that all guys said, let's move on and talk about the agenda today. We're going to do a market recap, and Jamie has something interesting that he pulled up and shared with me when we were doing our prep, and just about how the crazy dynamics, how different it was back, so much different than when we first started trading, 18 years ago. And you've heard me mention a lot about how the money gets kind of flows in and out of different sectors and different stocks. So we're going to talk about that. It's some really cool stuff there. Then we'll move on to the Holly recap. Then we're going to talk a little bit about data mining, and we're going to use kind of the election as an example, and how all the experts, got that wrong, and how different we are when we do our data mining, and Jamie will have some real good insight on that. And then I'm going to talk about, I spend a lot of time with traders, new people coming in and really wanting to come in and day trade, but they're finding it difficult, and I'm going to talk more about there's other things you can do, especially when you're when you're first starting, to maybe get a better feel of how you want to proceed as a trader. And I'm going to talk about position trading and how, and the advantages of it. And you can see some of the stuff I listed up there, and I'll go further in depth on those. And then I'll show you a little position trading layout that I've kind of just been working on. It's nothing. There's not going to be crazy new alerts. There'll be a few new alerts in there, but for the most part, you'll see some of the same stuff. But it just kind of give you a little different angle to take at trading, guys. All right, Jamie. Before we move into the spiders like we always do, like I said, Jamie dug this up for me after the close, and he said, "Look at this, and I'm going to let him come in and talk about the crazy dynamics we have now before our venture on into the market recap." Jamie?
Why, yes, indeed. So, what you guys are seeing on Andy's desktop right now, are the, way that the indices all closed today. Now, typically, we just don't see this many colors, and even earlier in the day, we even had the SPY more of a white color or flat, right? So you just don't see this very often, where the Qs are down 1.6, the Dow's up 1.2, and the SPY is basically flat or up 0.3%. I mean, that's the classic definition of things being kind of out of whack at this point in time with the market, and of course, with what the nation has just endured with the election craziness, not a big surprise to see the market acting in this capacity. Once we get to the charts that Andy's going to go through here in a minute, of course, we're going to see that we basically had a little mini Brexit of our own when we look at the chart pattern. It looks very similar to what happened back then. Knee-jerk reaction was that everything was fire and brimstone, and then a changing of the collective mind, if you will, and the market doing what it did today. Of course, one day doesn't make a trend change. So what we have to realize is that trade ideas, one of the big buzzwords today in the financial industry, or just in the data business in general, I'm sure everybody's heard the term big data being thrown around like it's just the soup du jour. And guess what it is? That's where the world is headed. That's where the world has been headed for a very long time. It's just very obvious at this point as we continue to not march, but blast through the information age. That curve, if we were able to pull it up right here, would be inverted. We're in that phase of the technological renaissance, I guess you could call it, for humans in general. So big data's fine. Big data's good. We've been doing big data for 14 years. The big question, what do you do with the big data? Because a bunch of big data is pretty worthless in and of itself. That's what the market stream currently is. It's this big, massive, archaic cloud of data. Well, we do good things with our big data. We put it all in its separate compartments. So we have the big data whenever we want to run our analysis, right? So I don't want to get too far ahead of the cart here, Andy.
Okay.
So
Sure.
it'd
Yeah,
probably be better to circle back around after you get done with your analysis.
absolutely. That's a
But
very good
definitely,
teaser.
definitely want to show you guys that chart because I mean, it looks like a Christmas tree up there. The Qs and the spies don't go exactly with one another, but they kind of tend to be a little bit more in sync than what we're seeing here, right? Of course, it's more technologically weighted, so who knows? This might be what we see moving forward. We just don't know. All we know right now is we're seeing things that are definitely out of the ordinary.
Yes. Very, very well said, and a nice teaser into that big data. And with that said, guys, yeah, just keep that in mind as we go through the market recap. It's because you don't see that very often. And now, obviously, I think a lot of this has to do, with the election and the changing of the guard and the different things that he will he will do to stimulate the economy. So we'll go into some of that too, but. With that said, what I'm going to do is kind of escape out of here, and let's go into the market. And first thing, let's kind of go through these. Let's get the spider stretched out here a little bit so we can see more. Well, while we have the Qs up there, let's just talk about that. I mean, look at that big, drawdown, in the Qs this morning. I mean, and you can look at a lot of the stocks that make up a majority, of the Qs. Amazon, big, huge sell-off before it bounced, crashed through all the support over here. Facebook, same way. Look at that huge tail in Facebook this morning. Uh, I noticed in Yahoo, one that we had mentioned as a nice gap fill, looked like it was a nice little bounce, and not looked like it had a nice little bounce, and also came back, would still be in play if you had bought this gap right here. But yeah, and then you take a look at the diamond. So I'm not going to pull up all the internets. I think you get the idea. Of what's working and what's not. And you take a look at the diamonds, just kind of breaking out. That's the old school, Dow 30. Your old school infrastructure industrial. That's what the I stands for. So it's kind of old school stuff. I noticed Manitowoc over the last couple of days just having a huge move. Look at that, from $4, all the way through 5 there. U.S. Steel, still moving higher. I could pull up FCX. Let's take a look at about as old school as you get, Caterpillar. So you can kind of see of what's working. But we are going to go back to the spiders here because that's what that does comprises 500 different companies. So I think of them all, the spiders are still the best barometer, of the overall market. But it's so different than what we used. Jamie and I were talking earlier about it. It's like, remember the days when a rising tide would lift all boats? That's not the case anymore. The tide seems to go in one part of the land and the other. I don't know. Just a few boats rise, but anyway, it's a strange dynamic that we've been experiencing, this change over the last several years, and it seems to be even getting more and more exaggerated. But let's talk about the spiders here. And this is a very typical day. If I was mentoring like I used to live to several, students, at one time I used to go over to China and once every month, and help about 450 traders over there. The first thing I would have been telling them in the morning, and Steve and I used to always preach this in our live trading studio that we used to have. Anytime you have a big, huge move in the market, you get a lot of times what's called, this wasn't an inside day, but I mean it did kind of creep up higher, but you get what's called either a doji or a spinning top, and what happens here, you get a big, huge move in the market, and this is more than just one day. You've had a few days here, and now you get a day of what's called digestion. The buyers and sellers are not really sure if this can continue. We're getting a little overbought here. Huge move. You have some sellers that are selling and taking profits. You have buyers coming in and say, "Oh boy, this market is about to break out," and then you kind of get a stalemate, and you call that right there a spinning top. kind of stretch it out here. So, and we're still butting up against this range. So not only that, you had some resistance here. You can see this, you know, the resistance we ran into, this prior support, now becomes resistance as you're trying to go back through it. So that's another little issue we had to deal with. I think tomorrow, although it is a Friday, and who knows, but a lot of times you can get what's called a go, pause, go. This is a perfect situation for a potential go, pause, go. And what I mean by that, you had a big go here, you're pausing, digesting, and breathing, and I'm not saying it's going to happen, but when you do get those moves, they sometimes can be really exaggerated, especially when you're getting close to highs over here. So keep an eye out tomorrow. If everything goes smooth, then this we could potentially see, it's very similar to what you see in the diamonds in the overall market, or I should say the overall market, because the spiders will break out and the Qs will roll over. But but anyway, looking at that SPY chart, guys, it's a potential that has a very good potential of a go, pause, go. So keep an eye on that for tomorrow. Really, you'd have to kind of use that high right there going back to today. But other than that, yeah. Jamie, you have anything you want to add to that?
No, I'm just glad to see us back up in this, in the clump range. And technically, we're still in there. We didn't close above, so looking at that little Brexity pattern there, not quite as stretched out. But as you said earlier when we were talking, Andy, if we were looking at post-market and pre-market, boy, it sure looked like that for a little while.
Yeah.
During past couple of days.
Yes.
So I think everybody's just kind of exhaling and breathing a giant sigh of relief that we're not in free fall and that we're back up into this range here. And, hey, once we get back up here, we're flirting with all-time highs yet once again. So be a good place to be.
Yeah.
Of course, as equal opportunity traders, both you and I, we really wouldn't mind if the market starts taking a header because, hey, nothing like short selling, and instead of riding the escalator up, how about taking the elevator down? So that time will come. It's not a matter of if, just a matter of when, because everything goes in cycles. Just about being able to take, hey, guess what's embedded in those cycles? Big data.
Yep.
So once again, we've got the big data. It's how we reorganize it. There's the kicker. There's the money maker. How do I take this data and reorganize it into something that I can capitalize on?
Yep.
And so, got a couple of, well, I've got a couple of examples, metaphorical and literal. So, whenever you're ready, we can go into that.
Is it something? Yeah. You want to? Would you like for me to pull up the slide, or you just want to take it and take
Let's go ahead
right
and
now?
I'll flip it around to me real quick, and we'll just get that easy.
Okay.
All right. Just let me know when you have eyes on here.
There we go. Got him.
Okay, so from a very simple perspective, let me get that slide pulled up here. First off, once again, everybody just soak this in. We got a Christmas tree going on here today, very odd, but after what we've seen and what's been going on, not that big of a surprise. So just kind of wanted to show everybody this quote of Mr. William Blake, and of course I've altered it a little bit. Of course, the original quote is, if the doors of perception were cleansed, everything would appear to man as it is, infinite, right? And I'm not going to go too far down the philosophical rabbit hole here, but you can see what I've done. If the doors of perception were cleansed, the market would appear to man as it is, which is beatable. Which leads us to the next point, and what Andy was alluding to earlier. Now, for those of you who watched the election, I think just about everybody watched it, unless you just wanted to wake up and get the news in the morning, which is not a bad technique either. But for those of us who were watching from start to finish, maybe some of you were watching the same metrics that I was. Big New York papers were showing, the website at the beginning of the night. They're like, yep, Trump's got a chance here, but it's only 5%. Hillary Clinton is the clear favorite. 95% odds. Well, as the night progressed, we certainly saw a different outcome. Not only were the experts and all these mathematicians and pollsters absolutely wrong, but they were about as wrong as you can get. So 5% for Trump, 95 for Hillary. By the end of the night, it was the exact opposite. 95% chance of victory for Trump, 5% for Clinton. Now, how could they be so wrong? They have plenty of data. They've got unlimited resources. How could they be so wrong? Well, they went wrong somewhere in the data collection, in the way that they processed the data once they got it. But the bottom line is they were wrong. Now, if they had done it right, we'd be more along the lines of what you see here from William Blake. You know, things might have seemed a little clearer, okay? But however, what are we talking about? What are we all here for? How does this tie into the market? And that is the big data that we are collecting. We're able to put it into its own little box and only use it when we want to run a test or see what's out there. Now, when we were just getting started earlier, Richard, who is a regular attendee, typed into the question box DRYS. Well, I was just going to talk a little bit about DRYS already. And here we are looking at the DRYS on a 5-minute intraday chart. And of course, a lot of people probably did quite well on this today. But where's the big data in this chart right here? All I see are 5-minute candles. You know, how do I extrapolate the big data? Well, you know, that's a great question, Jamie. Let me tell you. Well, we can take any one of these 5-minute blocks here and we can strip it down and see, you know, how our servers saw that information at that specific time. Not what we thought was happening within trade ideas, but what was actually happening in trade ideas. We can see volume or many other metrics, not only in a 1-minute time frame, we can see it in a 5-minute, 10-minute, 15, 30, 60, 120 minutes. You see, we've got nice little slots for all of our big data, which is really small bits of data, but combined, obviously, it's big data. Now, you know, how big is big data? Well, for those of you who use the product already, you're already aware that we go back for 65 trading days. And we're archiving every single tick of every single stock in the market. Now think about that for a moment. Approximately 8,000 tradable securities in a given day. On a 1-minute time frame, we're tracking all those filters that we have, you know, all the way from volume to range to RSI. And just to help drive that point home, for those of you who might not be subscribers yet, I'll just quickly spawn a new alert window. And I'm at the search tab. Now, how many boxes do we have to populate? Well, here they are. All of the alerts, all of the filters, you know, 8,000 stocks for 5-minute range, 8,000 stocks for 2-minute range. Over 8,000 tradable securities for every single metric and every tick and every print, right? So that's a lot of data. That definitely qualifies as big data, but it's how we manipulate that data that ends up being valuable in a trading day. So, hey, Andy, this pattern looks familiar. I mean, it doesn't really get any prettier than what we see here, a nice little flat consolidation area. And by the way, dry shippers, I mean, been seeing this stock for a very long time, you know. As we can see, it's had a very interesting ride down to, you know, I was thinking about the stock the other day. I'm like, well, pretty soon it's going to be a buck, and then it's going to be on the pinks. But look what's happening. You know, talk about a trend change lubricant, Andy. You know, I mean, hey, who wouldn't have wanted to be in it? You know, right, you know, either right down here or right there. Of course, it had to expend quite a bit of energy getting up there. But this looks very familiar to our trend changes. It's just this one kind of did it all in one day. But not to get too far off the topic. So it's what we do with that big data. So the market stream is, just as William Blake alludes to, that our perception is clouded by things, which prevents us from seeing the truth. Well, it's the same thing with the market. that big ominous data field that if we saw it, if we were able to see it in a physical format, we wouldn't be able to make any sense out of it. It'd be like when Neo sees those green monitors with all the weird, symbols flicking through in the Matrix. Yeah, we don't know what that is. But here, depending on what it is that you like to see, whether it's, we can use many different analogies, what type of setup are you looking for? What's the nature of the beast that you are hunting? There might be several different characteristics, all of which have different ways to ask the same question or to articulate that specific criteria. So with Trade Ideas, we give you all the tools that you need, not only to find the thing that you're looking for, but how to find it on a consistent basis. So simplicity, and I'm sure there are those of you out there who know I like to refer to Leonardo da Vinci a lot because one of his great quotes is, simplicity is the ultimate sophistication. So what you might also notice on this DRYS chart is nothing. And what I mean by that is there are no RSIs, there's no moving averages, there are no other traditional metrics that have been around since the market's been around, right? But with the advent of computer technology, it's almost like, well, all the things that are available out there to traders haven't really caught up. It's the same old things that people were watching before computers came into the mainstream. Might as well be a guy in your basement using large tablets and large compasses drawing point and figure charts, right? It's kind of pointless to do that. You'd never get anywhere. Back then, maybe you could. But now, with the advent of computer technology, we're able to analyze many more points of data and just come up with things that don't necessarily have names, that don't necessarily fit into the box of RSI or slow D or slow K or, Fibonacci retracements, right? We're in the information age. So, a very good analogy there that Andy and Dan and myself were discussing earlier is, it seems like they're detecting a lot more, disease and cancer out there in the world today. Now, does that mean there's a lot more disease and cancer out there? Or does that simply mean that our technology has gotten better at finding it? See? And that's all data related too. All those modern day testing mechanisms and, high-tech equipment. I mean, that's all technologically based. It's all computer run. It's all ones and zeros. That's why they're making all these new discoveries of things that not necessarily the frequency is up, but we just didn't have any methods to detect it before. Trade Ideas is the same thing, but in this informational space. So just wanted to point out, DRYS, when would you have liked to known about this stock? Well, would it be here on this first break? Yeah, evidently. That's where we had the most opportunity to get into it. But look what it does. Even if you miss this area here, buyer takes a breather. We have yet another opportunity to get in and still get a large lion's share of the move that had occurred. Now, is this rocket science? Did I just have to whip out my abacus and make some calculations? No. All I had to do was draw some horizontal lines. And, pretty simple stuff. Now, when we start going through these Holly trades, as we always do, a lot of the times, but not all the time, we see these same type setups. And it's just about repetition, ladies and gentlemen. So let's go ahead and talk about some of the Holly trades. And Andy, did you want to, did you have any, was there a topic in between that and the Holly trades, or am I good to go with Holly right now?
No, you're good to go. Yeah, you're absolutely.
Okay.
Yeah.
All right. So keeping in step with the craziness that we saw today and, the volatility that we saw today, and while we're on that topic, I mean, we closed up here. Hopefully it is maybe, for all of us bulls out there, maybe it is the go pause go setting up. But when we have kind of a uncertainty in the markets because of everything that's been going on, and then everybody's breathing that sigh of relief today. We got a nice little, not a huge gap between prior close, but or a flat open. Let's just call it a flat open, right? And then we run up. Everybody's like, "Woo, yeah, back to highs." Well, not so fast here. We're going to cycle all the way back down. And when we look at the high here, 218.31, wow, man, 3 points. So 3 points all the way down, not quite all the way back up, but pretty close. So, talk about a seesaw with razor blades on it. That's kind of what the market was today. All the way down, all the way back up. And of course, the red bars are always bigger because we go down an elevator, come back up on the staircase or the escalator. But let's go ahead and talk about some of these Holly trades. And so in keeping with the craziness, Holly, when it comes to a trade count today, I'd say she might have overindulged a little bit. Her appetite was pretty big today, and all of it came from a couple of different strategies. Now, for those of you who have been keeping up and are Holly subscribers, you kind of know the drill. But for those of you who might just be seeing this for the first time, before we talk about Holly, and of course in keeping with tradition, I always like to pull up her progress chart so that everybody can get the complete picture. So this is Holly's performance since the last day of December last year. So we could just call it January 1st. Not a big event on that first day that she came to life. First couple of days were the last 2 days of December of last year, 10 and 17 trades respectively, and then everything but 2 days is what's reflected here. So this is for the year. And of course, we've got a nice widening gap between us and the SPY. And of course, just like a stock that goes up, Holly's going to take her little pullbacks on her journey upward. And of course, today we had a nice little pullback. The past 2 days, Holly's posted some not huge, but moderate losses. But when we look at her performance over the course of the year, then factor in the election and all that good stuff, nobody likes to see losing days, but it is part of any system. So, still a nice wide gap. We'll see what tomorrow brings. And while we're on that topic about how quickly can we pivot, with big market changes, a few words about the history that Holly uses when she's analyzing these strategies. We have a full history of 65 trading days, and that is part of any top list or alert window that you use here in Trade Ideas. So when you put that alert window together, you can immediately go back and review the history, everything that configuration spawned for the past 65 trading days. So right now, even as this webinar is happening, we're incorporating all of today's tick data into the database. When that's done, the 65th day is going to drop off. So you see, if the market really is changing, it might take 2 or 3 days of incorporating new data before the new trends are targeted. Maybe it's 1 day, maybe it's 2 days. But just want to give everybody a peek into that historical functionality and how, if the market is changing in a drastic way, it might take 2 or 3 days of new data in there to affect the outcomes here. So getting on to the Holly trades, what we like to do is just kind of showcase, okay, this is the Holly panel. This was the starting team of strategies that she came up with after the analysis of the last trading period. So what do we have? We had 1, 2, 3, 4, 5, 6 short strategies. 1, 2, 3, 4. So a very even keel today. 6 longs, 6 shorts. We can see that most of the action today came from these 2 strategies. So they produced quite a few trades today, and then we even had 9, 8, 4, 3, and then these guys every single strategy fired today, except for this guy, which once again is an anomalous event because, Andy, as you know, In the past 2, 3, 4 weeks, we've had strategy hoppers with 14, sometimes even 15 strategies in there. And if there's 14 in there, usually half of them will get some action, and then the rest
Right.
will remain zeroed out. And this is the perfect testament and confirming correlation between the crazy random market action that we've seen. Number one, anytime we see a statistically weighted model like Holly experiencing what we see here, that means the statistical noise is at all-time highs as well. So even though we're applying statistical probability, things aren't working like they normally have been. It would be the equivalent of, say, the poker player, Texas Hold'em, or blackjack, playing cards in the casino, and even though he's been keeping count, and he knows that that deck that remains is stacked full of tens and face cards, every time he thinks the dealer's going to bust, the dealer throws down a 2. He's like, well, this can't happen again. So he gets in the same position the next day, and he's like, the odds, I cannot get any better odds here. The dealer's showing a 6, I'm showing a 5. I got to stand because I know he's going to bust. There's too many face cards in there. Turns over another 2. All right. Those are the unexpected things that can impact statistical performance. And I believe that's what we're seeing right now. So as the market tends to, and I use this term loosely for lack of anything better, but as soon as the market normalizes, we should see a return to the normal statistical data sets and performance. But as we can see here, risk off, Holly was down 202, taking a little bit more risk, only down $1.69. So, losing day nonetheless. It was really just a basic day of kind of a lot of events, way too many to keep up with. However, just because Holly's showing a down figure for her results, that doesn't mean that there wasn't some alpha hiding in here for us to systematically pick off. So there's a couple of different things that we like to point out to users of Holly to interact with the trades that she puts out. One of them is called a trade around. So GBT, when I double click here, we get the entry signal corresponding with the blue box over here. So as soon as Holly recommends this at $17.95, get a nice push, she's immediately green to the tune of 5-10 cents. Then this happens, and not only does it start moving against us, but her stop gets hit, the 46 cents stop loss, which also corresponds with the red box that we see right here. So just to give everybody an idea of where that was, I'll just put a line here as well. So Holly's initially green, then whoosh, she takes the elevator right down. That position gets stopped out. So whether the position is red, it doesn't even have to be green at first. As soon as Holly gets a red position, I simply make it a point to set a price limit alert for when it goes back through that area again. So I've got a line here, but what you would do, for those of you who have the advanced functionality in the price alerts, is simply right-click and set up that price alert for the same price. Because these statistical plays are weighted for the entire day. They might occur once, 2 times, 3 times, or more. So we can see here once, twice, 3 times, 4 times. This one triggered 4 times before it actually went. Of course, the market as a whole, the SPY, definitely going to play a little bit of havoc. When the whole market's coming down, there are those stocks that will go straight up, and I'm not just talking about the inverse ETFs either. On any given day, the market's going down, you have a handful of stocks that are doing nothing but going up, and vice versa. And those don't have anything to do with the inverse ETFs. They're just, hey, some institutions got to get them, and it's a good day to buy them, and there's a lot of selling. But in any case, whether we participate with Holly in the first entry signal, or whether we just put it on our watch list and go, okay, when she pops back through it again, maybe I'll have an interest in it. But of course, we are human beings. If Holly's spitting out longs and we're seeing this occur, well, that's called wearing our trader's hat. If the market is just bam, bam, bam all the way down, we have to use a little intuition and common sense. But once again, this is not your typical 3-point plunge on the SPY. We haven't been seeing this much lately. So had we drawn our line straight across, we would have gotten not one, but 3 more times where this signal was reached. So just because Holly misses it on the first point or the first attempt does not mean that it's not going to work. So it's always a very good idea when Holly's red just to draw that line and look for the second, third, fourth occurrence. So we could look at one more example of that in the VRTU, same methodology. We got this right here. Holly gets, I think this one was actually a reduced risk. So on these, even better because Holly didn't even let it get all the way to her stop loss. Got close. But we've programmed into Holly not only when she's winning in a trade, but when she's losing in a trade. The longer she's in the trade, the more conservative she's going to get. So she went ahead and decided to get out of the trade and only lose 19 cents as opposed to 44 cents. But if we have our trader's hat on and, Holly's getting out in this little flat wiki area, this is always a good sign, reverting back to that dry ship chart that we were looking at, whereas, one chart, VRTU, not nearly as pretty as what we see here. It looks more like this, but it's relatively the same, So if we can identify that and go, hey, buyers and sellers have kind of matched up here, that's what gives us a consolidation, on the second, third, fourth occurrence. Once it breaks through here, we've got more opportunity. Maybe the market's a little more settled out, whatever it is that we have to get to line up for us to make us feel comfortable, but we can always bank on the fact that we're coming to the party with a very high statistical probability from any strategy, from any play that's coming out of any of these strategies today. So Andy, while we're on this topic, anything to add, any comments, any particular trades that you'd like to have me take a look at in here, since there's so many of them today?
Yeah, there were a lot of trades today, and I empathize with what Jamie was saying. It has been a very typical market. I mean, a different market with all the volatility that we've had, lately, and because I've never, you very seldom see Holly will just spit out, one strategy over and over and over again. I saw that, and but it has to do with some of the parameters that were set, and they normally, if going back to the market that we've experienced over the last 60 days, in which this is optimized on, the ranges were probably a lot more tighter, and you wouldn't get these, for example, strong strong stock pulling back. But what happened is you get these, just like the chart he was saying, that first one he showed you. I mean, just 3 times it went back up to that level, and yeah, I can't remember what was it. I can't remember what it was. I can't
This
remember.
guy right here, the GBT.
Yeah. There we go. Yeah.
Right.
I mean, you see that kind of action. The stock eventually went up and had a very nice move, but look at the road it took to get there. And when you start getting that kind of action, you're going to get more stocks that are pulling, strong stocks pulling back are going to be pulling back a lot more. So it's just the nature of this market. And I agree with Jamie. This is, once it's settled down, you're going to see much more normal. This was totally an anomaly.
Well, Amy, and also too, while I'm sitting here looking at this little choppy mess right here, how many people out there do you think were, when the market was doing this, how many people probably thought, well, this looks like a good short, right? Yep. So that's another thing to point out here, is that the market was getting throttled. The SPY was getting throttled for 3 points. GBT had, what, 50 cent, 75 cent dollar excursion at the most on these severe wicks. What is that telling you? Hey, there's definitely a buyer in it. The buyer probably was tickled pink here in this area because he probably got a lot of the stock that he needed, right? And then as nature takes its course and the buyer really comes back in, there you have it. So, statistical models are good for those entries, and that's why this is a very good system to use, because it's us, the human, working with the machine that is doing all the heavy lifting and providing us with more homework. You know, we could never get this homework done. Holly's homework, good luck. Maybe if you had 100 people, maybe 100, all working all night, it might get done, but I doubt it. Matter of fact, it'd probably have to be multiples of that, just because of the millions of possible scenarios that are being analyzed. So the bottom line is, it's just not doable, and that is really the linchpin here.
Yeah.
This model, if you learn how to work with it properly, which a lot of it is just repetition, because the methodology of these trade arounds and the risk on, which I've got to talk about at least one risk on. So let's just pick this guy right here. Beautiful entry on the short side today, way up here. You know, there's the entry price that Holly executed on, and then of course it was just off to the races, right? So Holly, she gets out because the time expired. You know, she stayed in it for the entire duration. Let's see, what her exit time was, 11:46. So, you know, she gets out about right here. But wearing our trader's hats, maybe looking to the left to figure out how much room we had, you know, if we were down here at that point in time. But the bottom line is, Holly's getting out for her 84 cents an hour after the trade. You don't have to get out of it all. Now, it's always a good rule of thumb. If you were in 200 and Holly's getting out, go ahead and book that 100, give the other one back to flat, or give it up to where you're only going to make 30 cents on that second lot if it moves against you. But this literally allows you to pluck another up to 60 cents out of that trade, which is a nice move in any stock. So, you know, that's why we like to showcase, have columns for these values to let you know, okay, Holly's getting out, taking her 17 cents, but there was another almost 80 cents, a lot of meat left on that bone. And, you know, this is about as simple as you can get it, interacting with statistical probability and then being able to identify either the second turns on the trade arounds or just being able to say, okay, this trade's working, Holly's getting out because she has to, that's what she's programmed to do, but I'm going to stay in it, manage my risk, try to get more than what Holly's going to show on risk off. All right, Andy, I don't want to, I'm looking at the time here, it's just melting away, so I don't want to, I think I'm done here with Holly.
Okay,
and,
send it back over to me. I'm just answering a question real quick.
Sure.
Let's see. All right, guys. I'm really what I want to do is spend some time. I'm just gonna touch on. We've gone a little bit over, and I actually want to spend a little more time with the topic that I had coming up. I think that's a real good example. Some of the stocks we were looking at, guys, of why I try to steer a lot of people that don't have the time to put into the market like it requires to be a full-on day trader. Not on day trading can be very difficult. I mean, we give you the tools here to be very successful at it. I mean, there's some incredible alerts here, but there are also great alerts for what's called position trading. And I want to talk more about that, but I tell you what, I'm going to save it for next week because there's a lot of stuff I want to go into. I want to share some, some scanners and alerts with you. But one thing I'd like to just tease you with right here, I mentioned this option play magic. And during earnings season, and we're still in earnings season, and so here we are, a month gone by, and we're still getting tons of alerts through this. What I've recently started doing was, if you notice this earnings date, they're all like within 2. They're all either 0.25, 0.755. So what I've done was just taken the strategy and went to configure all, and just edited, selected, and went into filters and changed the earnings date. So I put -2 in here for the minimum and a +2 in the max. And what that's telling me, I only want to see stocks who have reported earnings basically within the last day. So I think it's a nice little filter for you guys that are using this. It's an incredible alert, and what it measures for those of you who missed that webinar, it measures the percent of option volume. If you look right here at this column right here, you'll see option volume today percentage. So anything that is blue is going to be over 100% normal volume. Anything that's going to be white, I believe it's over 150%. But you can see there, and you get some really, oh gosh, I scrolled back too far. And just going through this morning, you know, a Shake Shack came through here at 8:43. You look at the earnings play, I mean the earnings date, okay, negative 2.125, so that means it had it this morning. So you pull up Shack, you know, alert went off right there, had a nice little move, you know, went sideways for a while, finally came back down. There was some more in here. Let's see, Crocs I marked up. That started coming through here. This is kind of one I marked up because it did have some pretty big volume and options going on. If this thing gets through 8, maybe one to watch. I don't have time to go through all these. NXTs, another one went off at 9:27. Beautiful one right here. Once again, you know, looking left, broke through this range right here. So there's not a whole lot of resistance. Stock went off right there at 52.58. Some nice alpha, huge option volume, 260%. This one actually had it yesterday, earnings yesterday. So anyway, during earnings season, and this is actually much better the first 3 or 4 weeks of earnings, you see a lot of these had some moves in the morning. They did kind of settle down and settle down, but Macy's was coming through there doing huge option volume. And it's not so much a lot of times, even if you're position trading, you can look at these, huge gap in some of these. I don't like to trade the huge gaps, but you know there's some huge volume. So these are ones I will mark up for later date. You know, maybe, you know, high there. I'll mark it up and see if it breaks through there. When you're position trading or swing trading, you're looking for areas where there may be some really good alpha. And I will share this. I'll drop this in the box. I know it is a good alert, and I know a lot of you guys may not have it out there. So what I'm going to do is save and share the cloud, and I am just going to copy all, and I'll drop it in the chat window, guys. Let's see here. There you go. So if you guys want to copy that and load it, you can just load it to your cloud there. Be sure you save it when you do. That's on Option Magic. And yeah, I'm going to save the rest of this. I did have some more I wanted to get to, guys. I do want to talk more about the stuff I had on tap for the day, but that's fine. Jamie had some good stuff. We had a lot of stuff to talk about today. So I will save this. Why is it not going to this? There it goes. I'll save this position trading because there's a lot of good things I want to talk about this, guys, because I'm telling you there's a lot of people out there who are coming in and they're trying to day trade. There's nothing wrong with it, but it does take time, and this is a way to trade where it's a lot less stressful. Your stops are liberal, far less commissions, and I'm just telling you there's, you know, day trading is not for everybody, and this is something, so you guys don't miss next Thursday. I'm gonna get more in depth into this one. But we are running long here, so I am going to bring Scott in and to give you guys a great opportunity to get this software at a really good price. So Scott, if you want to come in, we will.
Yeah. Well, thanks, Andy.
You have controls here. You bet.
Thanks, Andy. Thanks, Jamie. Well, we have a code for you for the Trading Studio webinar called Get Alpha, G-E-T Alpha, A-L-P-H-A, all caps. You can also download a handout from your GoToWebinar interface. Click on the little plus next to where it says Handouts, and there's a link there for you to get a download. So just go to tradeIdeas.com/price and use that code on checkout, and that takes 15% off your first month or year of premium. So you stand to save a lot off your first year. It'll also take 10% off that first month or year of standard. And a lot of people ask us why we don't have a free trial for a week or two. Well, we actually provide a full hour of one-on-one training with any subscription. So essentially, going ahead and doing that standard month with 10% off gets you a full hour of training. fantastic value, and that's a great way to get your feet wet if you're uncertain as to whether or not Trade Ideas is the right tool for you and your style of trading. But you can also use this code to upgrade from the standard monthly into the standard premium, into the monthly premium or premium annual. And that's a good move to do as well. So just go ahead and use Get Alpha on checkout to go ahead and save. If you have any questions, email us info@trade-ideas.com. And I want to remind everyone the recording of this webinar will be up later on, either tonight or tomorrow morning. You can email Andy. He's andy@trade-ideas.com, and Jamie is jhodge@trade-ideas.com. Our info at is the best place to send technical questions. If you have a subscription question, you can call us on the 619 number during regular operating hours, or just shoot us an email. Follow Jamie at QuantBot on Twitter. Our Steve Gomez is at Today Trader. He's another one of our educators. And Dan Merkin is Trade Ideas 1. We also have at Trade Ideas. Thanks, everyone, for attending. We will see you in Monday's webinar. There's an office hours webinar on Monday. You'll get an invite for that. Talk to you all then. Thanks, Jamie. Thanks, Andy. Have a good afternoon.
Thanks, everybody.